All right, so let's talk about it, because I'm starting to see the B word pop up where gold is concerned, bubble. And I was reading this stat. Gold and silver have attracted a record $34.2 billion in inflows over the past 10 weeks, the largest surge ever recorded. Can it continue?
Yes, in a word, it can. You know why? Because it's not just the retail trade. It's not just people pouring into the ETFs. This has been going on now in slow motion for the last 4.5, almost 5 years. It's central bank buying that has been going on at a record pace. They've been buying 1,000 to 1,100 tons each year for the last 4 years, which doubled the previous decade's purchases at a price which is twice the previous decade's price, if not higher. Central banks, Morgan and John, have been hedging their own ineptitude, and they're doing it in historic fashion. So despite the fact that RSIs are pinned on the upside and, you know, you're looking at standard deviations away from the 50 and the 200-day moving average in terms of the price of gold, the story is absolutely intact.
All right. De-dollarization, debasement, all the words with the start with D. Let's talk about volatility, because the volatility index, the VIX, was a touch above 18 today. That's after jumping to a high above 28 on Friday. So basically, we've seen a collapse from Friday to Monday. Should investors trust this move, especially since typically in October we see a peak in volatility?
Let's talk another D word, dangerous. What happened last week to get volatility to spike? It wasn't a market sell-off. I mean, we've seen sell-offs of that magnitude before, and the VIX barely budges. But to your point, we saw a VIX, which has been a teenager for quite some time, spike up somewhere between 25 and 27 on, again, what was a bit of an innocuous move. And I think there's leverage in the system that the volatility index is trying to sniff out. Yes, we're back down, but I don't think bouts with volatility for the remainder of the year are over by any stretch of the imagination.